Hi class, this is Dr. Sharma again. I'm going over how you would complete the problem-based learning activity number 2, which deals with the balance sheet and the item analysis. Now let me just go over the requirements and then I will guide you through how to go about. First, you'll have to have two files. One is an Excel file, the other is a Word file. So in the Excel file, what you're going to do is, for your problem-based learning activity number 1, you downloaded the income statement, balance sheet, cash flow statement of a company that you chose to work for your problem-based learning activity. So using that, you will copy the one that says balance sheet and then convert all the figures for both the years. Usually balance sheet comes with 2 years, so you convert all the years into percentages by dividing each line item in the balance sheet by the total assets. Again, as I said to you, I will go over that. Then you will calculate the current ratio for year 2 and year 1. That year 2 and year 1 depends upon which year of information you have with you. Some of you may have 2022 and 2021, so year 2 would be 22 and year 1 would be 21. Some of you may have year 2021 and year 2020, depending upon the information available for that particular company. So you'll be calculating the current ratio for the 2 years. Use the formula current assets divided by current liabilities to calculate the current ratio, and calculate the ratio of fixed assets to long-term liabilities. That's the second ratio you're going to calculate. Now then in the Word file, Excel file, you're just doing the calculations. In the Word file, you're going to define liquidity ratios that you can use the textbook or the reading materials available. Define the solvency ratio and the profitability ratios in general. Then you discuss the two ratios that you have calculated in the Excel file. That is the current ratio. Now normally a current ratio of 2 is considered as good. So it has to be higher than 2 or higher. If it is less than 2, then the current ratio as such is not very good. The company will not be able to pay off its liabilities, current liabilities, with its own current assets. And so that's the discussion you'll have to talk about. And then next thing that you're going to do is you will be talking about what is the ratio of fixed assets to long-term liabilities. Now, as you know, all long-term liabilities have to be paid in the long run. So you should have enough resources to pay off the long-term liabilities with your own fixed assets. So what does that mean? It means if the ratio is 1 or above in terms of ratio of fixed assets, you will be able to pay off your liabilities with your own fixed assets. But remember, while taking the fixed assets, don't include the long-term investment. So that is something that you have to understand about. So then while discussing, you'll have to discuss both the current ratio and the ratio of fixed assets to long-term liabilities. Then the third is the analysis part. Based on the ratio, which year is the company better prepared in terms of liquidity and solvency? So liquidity is the current ratio. Solvency, you will be basing your analysis based on the ratio of fixed assets to long-term liabilities. And you can also use the vertical analysis that you have done. The vertical analysis is that conversion that you did, so you can compare the figures and make comments. So that is the requirement. Both the Excel files and Word files must be submitted. Of course, remember to use the file naming convention while submitting these files. The Word file should be written in a paper format in 3 paragraphs. This is number 1, the define one. Number 2, discuss the ratios, and number 3 is the analysis. So those are the 3 parts in the Word file. Remember, I need to see an Excel file as well as the Word file. Okay, now what I'm going to do is I'm going to bring up that file you would have downloaded for your company. So this is the file I had saved in my name. So this is what you are going to do as well. This is the consolidated balance sheet for the company I'm using as a sample, that is the Exxon Mobil. Now what you are going to do is you are going to just right click this one whenever you are, and then move or copy, and then you start a new file. Okay, so this will be, and click copy. So now you can see a new file with book 2 has been opened, and you see consolidated balance sheet at the bottom. Now go ahead and save as. So you can save the place that I had asked you to use the folder. So you're going to use the file naming convention. That's going to be last name. Mine is Sharma. First initial of my first name, that is N. And then of course I'm going to give the class information, accounting 210 D1, and then this is PBL activity 2. So this is the second part that you are going to do. Okay, in this, what I said to you was the first requirement, if you is to convert everything into percentages. So what I would do first thing is insert, select this C. When you just click on that and right click your mouse, there will be this option. So do insert. Now once you have that insert, here you're going to say 2021 percentage or year 2 percentage, whatever year is yours, and here you're going to say 2020 percentage. Okay, now what I said to you was each of these line items you will be dividing with the total assets. So first what I would do is I would like to clean up some of the information here. First, mark all the totals. See here, this is total current assets, so you can see, use a shade, whichever color you like. Total assets, total current assets, total assets, and then here you will have total current liabilities, and then here you will have total liabilities. Okay, and then of course you have down here total equity and total liabilities and equity. So these are some of the regular items, the totals that will be interested. So that is why I wanted you to mark them so that we are keeping tab of them. Okay, next thing what I want you to do is go down here at the bottom and see, click that page layout, and you will see this information is coming in 2 pages. So we don't want 2 pages. So that's why what you do is go back to that layout which is normal, and then drag this column information. Okay, so that should be okay. All right, so now you have, of course, you will not be able to see everything here. So what you can do is you can select all of them and say wrap text. So that will give you that will wrap any additional text that is there so that you can see the information. Okay, once you have done that formatting, now what you're going to do is you're going to start with this cash and cash equivalent. So how you calculate a percentage for that is you are going to divide each of these line items wherever you see figures by the total asset. So this is the total asset here. So put a formula. equal to, all formulas will start with a equal to in Excel. Select this cell, that is the first cell, and divide it by total assets. So that is B13. Now make sure, because we are dividing each of these line items with this number, so I have to make that as a absolute figure. So if it changes, I will get a wrong percentage. So to make a figure absolute is to put a dollar sign in front of that cell reference and in front of that number. Okay, so that will be $B $13. So it depends upon which line your information is. So that is so here you can see this is 0, although it is supposed to be. So what you do, go up here and select percentage and increase the percentage. Okay, so this will be, yeah, so that will be good. Now what you can do is you can simply drag it down till you have all these. Okay, so you have dragged all the formula down and you can see all these information. The Excel has automatically calculated the percentage. Wherever you see value, because there is nothing there, so that's why what you do is you just remove that information. I think that is the only thing that is left. Now that is for 2021. Remember, you should get 100% for the total assets if you have calculated your formula correctly. And then down here, your total liabilities and equity also should be 100%. If you have gotten 100% in that, then of course that is something that you will have to understand, that you have done your information correctly. Okay, so now what you can do is, what does this mean? It means cash and cash equivalent is 2% of, so if you have $100 as an asset, your cash is 2% of that. And if you look at that, because you have that 0, so we don't want that information deleted because there is no figure here, so that's why Excel is marking that 0. If you see any here also, so okay, that too. Now what does it mean? Inventory, these are the two inventories. So the inventory of this company is about 5% of the total assets. Your current asset is 17.45%. So now then when you go down to the liability side, the current liabilities is 16%, 16.7%. So that means if I have $100 of asset, I have liabilities of 16.7. Now we have completed this for 2021. Now what we are going to do, as you can see, this marquee is appearing. It means your information is going to go into another page. So we don't want that to be in 2 pages. So that's why, to make sure that you fit in the information in 1 page as much as you can, we'll do that. So now what you're going to do is you're going to do the same information, equal to, this is for 2020, D3 divided 9. Now again find the total asset. This is your total asset here, that is D13. Now again what you have to do is put a dollar sign in front of D and in front of 13. Now make sure you do that only for the denominator, not the numerator. So hit enter, and now you can see this is you have to convert that in percentages, increase to 2 decimal, and you drag it down and leave it here. Now remember, you can also, instead of doing that, what you can do, you can also copy and paste. So it is going to be the same thing. So, but however, that's how we do. Okay, then make sure you have 100% where it says total assets and 100% where it says total liabilities and equity. Now any of these value errors, because there is nothing, so we'll do remove them. This 0%, remove them, but don't remove 0% if there is a value. But here we don't see a value, so that is why we can safely remove that. Here there is no value against, so we can remove that. So that is, and here there is no value, so you can remove that. Okay, you can remove that by pressing the delete button in your keyboard. Alright, so now what you have is you have the information. Now normally what you want to do is you want this to be formatted as on the right hand side. Okay, this top one as top line and this one as aligned right, because the figures have to be aligned right. Okay, so that is the formatting that you will do. So now you have completed this first part of the Excel requirement. Now while making comments, what you can do is you can just pick up some figures that you are interested in basically and go over it. Accounts payable are 10.58% of the total assets. Now they are what I call 14.98. So as compared to the last year, accounts payable has increased. So that is something that you can do. And the long-term debt has decreased. So that means they have paid off some of their long-term debt during the year 2021. So that's how the interpretation analysis part you can do. So you can use that information. Now the second part of the information is your current ratio. So you just go down here, write current ratio. Remember, current ratio is current assets divided by current liabilities. Okay, so now what I'm going to do is I'm going to do only for 2021 and 2020. So that is why what you are going to do is you are going to put this in here, equal to. Now what am I looking at? I'm looking at current, total current assets. So go up, here it is, the total current asset, that is this figure, then slash divide by total current liability. So that is this figure here. Okay, so this is, now we don't want that many decimal points, so you can just say okay, that is. So once you have calculated that, what you can do is you can just, because the formula is same, we'll copy it. Okay, so and then you can paste it here. All right, so as you can see, overall the current ratio is 0.796 in 2020, and 2021 it is 1.044. So it has improved, so this is good, but it is less than 2. So what you will say in the analysis is, although the current ratio has increased as compared to the last year, but the company will struggle to pay off its current liabilities with its own current assets. So that is something that you will have to talk about. Now next thing that you are going to calculate is the ratio of fixed assets divided by total liabilities. So that is what you will have to look for. Okay, so that is something that you're going to do. Now once you have that information, so what you're going to look at is you're going to look at the total fixed assets. Remember, while doing the total fixed assets, don't include this investment item. So these are your fixed assets. These are the long-term assets. Because remember, till here are total current assets. and this is the long term, this is the total asset. So therefore your long-term asset will be these figures. But as I said to you, don't use the investment because it's a separate kind of an asset. So therefore we don't use that as part of our calculation. We just want to use these two. Okay, so what you're going to do is go down here. This is going to be equal to, now put a parenthesis and then add this figure here plus this figure here. So those are your, close the parenthesis, divided by total liabilities, total long-term liabilities. So we have to look for long-term liabilities. Now I need a parenthesis again because I know the total liabilities minus the current liabilities. So the total current liabilities are this. So close the parenthesis, and that is the ratio. So again, that is too much. So what you're going to do is you're going to reduce the number of places by clicking this, decrease the decimal, and here copy and paste. Now it doesn't look like there is much of a change. So here, remember, this should be total long-term liabilities. Okay, so now you can see the ratio has remained almost constant. So that means the company will be able to pay off its long-term liabilities with its own long-term assets. Now, of course, there is no rule of a thumb, but the ratios has improved as compared to the last year. So that is all that you are going to do. So what you are going to do is you have already saved this. So you save it, make sure it fits in one page. So then you do the analysis in a Word file and submit it. So that is all that you're going to do. So that is all for today.